Welcome to the Investero. Have you ever wondered if there is a hidden way to make money in crypto that most people are simply ignoring? Everyone talks about buying Bitcoin, trading altcoins, or jumping into meme coins. But the truth is, the majority of these conversations just repeat the same strategies over and over again. What if I told you that there's an overlooked crypto investment method that could be quietly working in the background, generating steady gains while others are chasing hype and losing focus? Stay with me through this video, because by the end, you'll have a completely different perspective on how to approach crypto investing. And you might just discover a strategy that can set you apart from the crowd. When most people enter the crypto space, they follow the herd. They buy Bitcoin when it's at its peak, jump on the latest altcoin trend, or get caught up in speculative NFT bubbles. The overlooked method I want to share today isn't glamorous. It's not going to give you overnight 100x returns. But it is something that builds wealth over time in a way that's far more sustainable. It revolves around patience, compounding. Before diving deeper, let's think about how traditional investments work. The wealthiest people in the stock market don't necessarily gamble on penny stocks. Instead, they use strategies like dividend reinvestment, dollar cost averaging, and holding on to blue chip stocks for years. Crypto has its own versions of these methods, but they often get overlooked because the majority of new investors only pay attention to hype-driven news. This overlooked crypto investment method is what I like to call strategic yield positioning. It's all about putting your assets to work in protocols, platforms, projects that provide long-term sustainable returns through staking, liquidity provision, or other forms of yield generation while minimizing unnecessary risks. For example, many people hold Ethereum or other proof-of-stake coins in their wallets without doing anything. What they don't realize is that by staking these coins in a secure and reliable validator, they could be earning passive income on top of their holdings. Think about it. Instead of just waiting for the price to rise, your crypto is actively generating rewards. Over time, those small returns can snowball into something far bigger than you might expect. Yet so many investors ignore this opportunity because they're too busy chasing the next big meme token. Another part of this overlooked method is stablecoin yield strategies. While most people see stablecoins as just a way to hold value in between trades, smart investors realize that platforms and protocols often pay generous yields for providing liquidity in stablecoin pairs or lending them out. This means you can generate returns without being exposed to the wild volatility of other cryptocurrencies. It's a quiet, steady way to build wealth while everyone else is stressing about price charts going up and down. But here's the catch. Like every investment strategy, this requires discipline. You can just throw your coins into any staking pool or liquidity farm and expect to get rich. Many projects are designed to attract investors with insanely high APYs, only to collapse later. That's why the overlooked method isn't just about yield. It's about choosing carefully. It's about understanding which platforms are reputable, which projects have long-term stability, and which rewards are worth the risks. It's not glamorous, but it's the kind of steady approach that has the potential to outperform reckless speculation in the long run. Let me give you a real-world example of how this method plays out. Imagine someone bought Ethereum 5 years ago and simply held it. Yes, they made gains when ETH's price went up. But someone else who bought the same amount and consistently staked it in a safe validator earned additional ETH rewards along the way. When the price of Ethereum rose, those extra rewards multiplied in value. By the end of 5 years, the second person not only had their original ETH, but also a large chunk of additional ETH that was essentially earned for free. That's the power of compounding in crypto, and that's why this strategy is so overlooked, yet so effective. The same principle applies to Bitcoin, even though it doesn't use proof of stake. Savvy investors have found ways to lend out their BTC on trusted platforms, earning steady interest without selling. Others use wrapped Bitcoin and decentralized finance protocols to put their BTC to work. This isn't about trying to time the market perfectly or predicting the next bull run. It's about making sure that your assets are always generating something, even in the quiet times when prices seem flat. Now, you might be thinking, if this method is so powerful, why don't more people talk about it? The answer is simple. It's not flashy. It doesn't make headlines like a meme coin skyrocketing 10,000% overnight. Influencers can't build hype around it because it doesn't produce instant results. And let's be honest, Most people in crypto are looking for that lottery ticket, that one investment that will make them rich overnight. But those who understand the true potential of overlooked methods are quietly building wealth, while others are chasing hype and losing money. Think about this. In traditional finance, banks and institutions thrive on compound interest and steady growth. They don't bet everything on a single risky move. They build systems that ensure consistent returns over time. Crypto allows us to do the same thing, but with even greater potential, because the yields are often much higher than what traditional finance can offer. By ignoring this, most retail investors are literally leaving money on the table. The key to mastering this method is diversification. You don't want to put all your assets into one yield strategy. Spread them out, some in staking, some in lending, some in liquidity provision. By doing this, you're not only earning passive returns, but also minimizing the risks of any one platform failing. And here's another overlooked advantage. Many of these strategies are accessible directly from decentralized wallets, meaning you don't need to rely solely on centralized exchanges. You remain in control of your assets while letting them work for you. Another factor that makes this method powerful is the psychological shift it creates. Instead of constantly worrying about short-term price swings, you're no longer glued to charts 24/7, stressing over every little dip or pump. You know that no matter what happens in the short term, your portfolio is steadily growing in the background. This mindset shift can make you a much stronger investor, because you're less likely to panic, sell, or make emotional decisions. Now, I want to be clear. This method isn't risk-free. Platforms can get hacked, protocols can fail, and sometimes rewards don't last forever. But when compared to the sheer recklessness of chasing meme coins or trying to day trade without experience, the risks are often lower and more manageable. The overlooked part is not the existence of these methods. So here's what I want you to take away from this. The next time you hear about some crazy new coin promising insane returns, stop and think. Instead of running after it, ask yourself whether your current holdings could be working harder for you. Could your Ethereum be staked? Could your stablecoins be generating steady interest? Could your Bitcoin be lent safely for small but consistent returns? These are the kinds of questions that separate serious investors from gamblers. By focusing on overlooked strategies, you're not just investing, you're building a system. A system where your money works for you day and night, bull market or bear market. A system that compounds over time and creates real wealth rather than fleeting hype. You'll know that slow and steady truly does win the race in crypto. So if you've been feeling lost in the noise of crypto, if you're tired of chasing trends that go nowhere, maybe it's time to step back and consider the overlooked crypto investment method. It might not make you rich overnight, but it has the potential to create lasting wealth and financial freedom. Smart investors are already quietly winning with the overlooked crypto investment method. Subscribe to the Invest Arrow.